G'day guys, Seeney here and welcome to another episode on the Australian Wealth channel. In this episode, we're going to be talking about how you can buy a home when you're a business owner. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. So you are a business owner and you want to buy a home. Now, the first thing you understand if you're a business owner and you're looking to buy a home is that it's significantly harder than if you were just working a regular salaried job. You know, there's a lot more requirements and things that come into play, which I want to talk about in this video. So you might find it really useful and give you a little bit of insight into how to actually get hold of a home while taking into some of the other considerations that I'm going to talk about. So please make sure you like and subscribe. It really helps get these videos out to more people. One of the first things that you'll notice is that banks have slightly different criteria if you are self-employed or running your own business. And what that is that basically instead of just providing pay slips for 3 months or your bank statements, which you also do have to include, but on top of that, you'll also need to provide tax returns. So if you're looking to get a loan from a bank to get hold of a property, then this is something that is a very important consideration. So obviously, you need to talk to a mortgage broker and they're going to give you really detailed advice about what to actually do. So when it comes to running a business in Australia, most banks are going to be expecting 2 years worth of tax returns so that they can see exactly what your taxable income is. Now, some banks, including ANZ, will also allow 1 year's tax returns instead of 2. So that's something to take into account. So if your business has really taken off and it's growing really fast and you're earning some good income, but it's only happened in the last year, then there are some lenders out there that will offer 1 year's tax returns instead of having to provide them with 2 years tax returns. And that was definitely what we did in our case. My business started to scale up quite quickly. And of course, my income for 1 year on paper was really good, but the previous year was not so good. So we just went with the 1 year option and that allowed us to get into our property faster. So when it comes to this, different banks will have different stipulations about what they want. Some will be expecting all bank statements as well as tax returns. It varies a little bit lender to lender. So the best thing you can do is talk to a mortgage broker who'll be able to work out what the best thing is for your specific situation. There's not a one size fits all answer on this question. It's a lot more complicated than that. Every single business is different. How it's run is different. So it's important to speak to a mortgage broker about your specific circumstances. So when it comes to this, it's not as simple as, oh, I earn this much money, therefore I can borrow this much as a business owner. There's a lot of different other factors that you need to take into account. And one of the most important factors to take into account is to do with tax considerations. So it's a bit of a double-edged sword when you're a business owner. If you're just working a salary job, it's pretty straightforward. I earn this much, this much tax is taken out of my check. I get a bit of a refund and that's that. That's just how much I earn. If you're salaried, then obviously you don't have anywhere near the amount of deductions that you can take as a business owner. As a business owner, there's a lot of expenses that come with running a business. In my case, there's expenses such as equipment purchases. When I'm out on the road, there's different things that I can claim if it is as a result of furthering my business and the costs that are involved in furthering the business and achieving a profit. So for the first property or two, what you're going to have to do is factor in how much tax you want to pay versus what you want your borrowing power to be. And these kind of go on opposite ends of the spectrum. So obviously as a business owner, you can take as many legal deductions as you want. However, if you want to not take those deductions, you don't have to take them. So let's say that you need your income to be at a certain level so that you can get the borrowing power that you need. You might need to forego some of those deductions. And unfortunately, that means paying a little bit more tax in that specific scenario. But if it means that you can get into a property, you really need to weigh up, what that's going to be. Is it going to be paying like getting an extra $5,000 back in tax or an extra $10,000 back in tax? Or is it being able to borrow that little bit more money so that you can go and be in that property that you want to be in? So it's really important to get the balance of this right, because there is a significant jump in the amount of borrowing power based on your income. So I run some calculations on the Commonwealth Bank's borrowing power tool that they have online, and there's quite a significant jump. Even just $10,000 of extra income is about $100,000 in borrowing power. So you really need to take that into account, that, you know, to get yourself across the line, you might need to pay more tax. So, but of course, talk to a mortgage broker, talk to an accountant, and see how you can make it work. You know, it's quite a complicated process. So I'd say that your first port of call, you know, would be the mortgage broker. Find out how much you can borrow currently. And, you know, if you're about to do your tax, then potentially you have the option of, you know, reducing some of those deductions to boost the income level a bit more, and you might be able to get that across the line. So thank you guys so much for watching this video. Please make sure you like and subscribe to the channel. Really helps to get these videos out to more people. Of course, if you want to get yourself a free stock, you can do that with Stake. I have a link in the description. You get a free stock when you sign up and deposit money into the brokerage and get yourself sorted for the future. And I also have a link to WeMoney, who are also offering $5 for every single person that joins. So if you want to get yourself literally free money just by signing up to a social media plus budgeting and net worth tracker, I think it's fantastic. Then there's a link in the description. So thank you guys so much for watching. Please make sure you like and subscribe, and we'll see you later.